Good evening, good morning, or good afternoon, wherever you are. Welcome to the show. This is Psycho Silver. My name is Jerome, and I do hope that today you're counting your wealth in ounces and also that you're holding your word to yourself. Very important. Thank you for putting on the show. What we do here is we cruise the news. I've spent years finding the best places to get the news online, and also I have a pretty darn good Twitter account that brings me financial news. It brings it right to me. And what I do is I take the best of the best and I do my own aggregation. And we look through the news. We look for things that are about silver and gold, precious metals in general. We also look at the current events that are impacting the economy. We're watching very closely the death of the dollar. How long will it take? I've had the feeling that we are close to the end for a while, but close to the end doesn't necessarily mean this year. It just means this decade, in my opinion. But every day we see more proof of that, of the death of the dollar. And you get to pretty much every day there's a new piece of information and you get to see it unfold in real time. That's what I was going to say. I'm experimenting with a new layout to the show today. So I'll tell you my plans for the show real quick, and then we'll just jump into the news. My plans for the show is we're going to keep doing news like this for a while, and I do hope that it's interesting enough and I'm entertaining enough to get some subscribers and get the ball rolling a little bit. I'm learning the software, but the ultimate goal is we're going to be doing interesting interviews, and I do want to bring people in studio, at least those who would be interested in talking to an audience. And of course, on Zoom, people in the precious metal space, people that are interested in global politics, geopolitics, the global economy, keeping an eye on the dollar, of course. But also, we do study the manipulation that people do encounter when they attempt to educate themselves on this fiat Ponzi scheme debt system. It's a Ponzi scheme.
Sting is a pyramid since time immemorial. Shit runs downhill, money goes up. It's that simple.
And we did see some interesting tweets about the nature of this beast that we'll be going through. But I'm going to experiment with a new format here tonight, and I hope this doesn't backfire on me. I'm a little nervous, but we'll see how it goes tonight. Instead of opening a million tabs in my browser, I was experimenting with different browser plugins that help me manage the RAM on my computer and to sort all the million tabs that I use to run this show. I'm gonna try something new tonight. I'm gonna run the whole show through Twitter, and so all the interesting stuff that I find on websites, Reddit, Gab, where else do I go? There's a lot of different places. All these different places I go to, I'm going to try and channel it through Twitter, because I would say at least 40-50% of the most interesting things that are said about geopolitics, about precious metals, about the death of the dollar, and we're severely impacted by the war that we're in too. The war that's occurring, in my opinion, is very much about, of course, the death of the dollar. There's the BRICS is a component of this, and the rise of a multipolar world, with US being formerly making it a unipolar world. But we saw very recently that even Saudi Arabia is not really taking our side like they used to. They claim they're taking no sides, but the White House claims they're taking Russia's side. So we do see that happening, but also the mad dash to secure resources. It's very important right now. These resources need to be secured. Who has the resources is going to dictate. I do believe that this Ponzi scheme is to capture the resources as quickly as possible. And when we do get our reset, the reset's going to look a lot different, because as many resources as possible would have already been scooped up and away from people that could challenge those that do have them now. whoever they are. We can talk more about that some other, whoever they are. But anyways, I hope that all was informative. It makes sense. And let's jump into the news and see what's going on this weekend. There's plenty going on in a weekend. I did really love this post on Reddit here. Here, one user posted from their local bread shop how prices have risen. Excuse me, not how prices have risen. And here even flour, the most basic thing, is significantly more than double the price from January 21st. Good Lord. Granulated sugar is up quite a bit, like a third. Powdered sugar, what's the most outrageous thing? AP shortening is pretty significant, more than double. Cake flour, it looks like flour is the most, well, also the eggs right here. Pretty significant, all of this. And we can be certain that the effects of these raising prices there's a lag. There's a little latency. So we are just probably, I would say we are currently in the state of shock, maybe denial. But reality is setting in, especially as people lose their jobs, right? We know that it's coming. We know that it's coming. Let's get into this next tweet here. Here we have a tweet from someone named Sticky. I do like this woman's account. I'm going to keep a close eye on this one. Sticky did some really simple TA for us that looks pretty good. I mean, it makes sense anyway. This has the SPX going down quite a bit. And she did cut out all the all the data there. But as far as shapes go, that looks like a likely shape based upon where we've been. I count it. Next up, we do have a tweet here from Michael Gade. Michael Gade writes, I'm not arguing stocks don't ultimately go lower or that the bear market is over, but if bond volatility does not subside soon, there will be 370 trillion of global debt, and it is the end. The system cannot survive under the hell of this year, so there's only one choice. And I do believe he is saying they must pivot. That's been such a huge argument right now. To pivot or not to pivot. It doesn't, to me, I don't know that it matters much. How do you want to die? You want the firing squad or do you want the electric chair? And I did, that's just why I came down. I really did love this tweet. The system was never built for sustainability. It was built for greed. Very true. Very true. Next up, here we had a tweet from Kevin Logan Jr. And Kevin writes, I'm laughing that people don't understand this asymmetry here. It's pure math. The only way to go over time is up or the system ends. All our speculative bets are off. There is, and this fits right in with the discussion that we're having here, is it must go up. It has to. It's a Ponzi scheme.
This thing is a pyramid since time immemorial. Shit runs downhill, money goes up. It's that simple.
And that is a response to another tweet that Michael Gade had wrote here. And he said, only because the alternative is the end. A system leverage like this cannot survive if it persists. Hence, the end of the world is the bull case. I can tell this might be a little slower, but I'm trying to come up with workarounds to help. Because there will be times where we're waiting for the Twitter to load, but there's a lot of benefits to doing the show this way. First of all, I'll never lose all my tabs again, because that happened there's been a couple times I was nearly done with the show and all my tabs, I accidentally closed them all. I suppose that's where you can edit the show and finish it that way. But I am determined to do these shows in one take because very soon, the goal is to be live. And I do hope that my audience grows when we go live. I'm waiting for a new camera, and I'm going to slightly arrange the part that you can't see. I'm going to keep this background the same. When the new camera comes, though, hopefully the picture quality is crystal clear and it looks really nice. And then if I get comfortable with this new way of doing things, we're going to start going live. Tell me what you think. Give me your opinion. Here we have a tweet from the great Marti. Marti writes, few understand the carnage and consequences of when, and in my opinion, the DXY goes parabolic. I imagine this is a little tough to see on this screen here. Again, it's just very simple. This is very basic TA. And this his move going parabolic here would be very much outside of the trend line. So that would be indeed parabolic. I guess that's why he used that word. But going up over 120 up to 126 would be devastating. We did see what already happened with the Bank of Japan, with the Bank of England. With the Bank of England capitulating to the higher interest rates and resuming the money printing to stabilize the bond market. But that does not fix the system. The problem with the system is it's insolvent, and we are living in a debt-based fiat Ponzi scheme. And so there's only temporary fixes. Next up. Ooh. And then when that happens, it starts you right from the top. Or where did I go here? This could be a problem. I'm trying to get to my feed. Yeah, and then I got to scroll down again. This might interrupt the flow of the show. But maybe it's just an opportunity for me to talk while I get to the next one. Here we have a tweet from Bullion Star, hashtag freefall. Bullion Star is pointing out that the London LBMA silver vaults are also on a nearly vertical decline there. That looks very significant. But the one thing about this chart is the bottom is 800,000. So it's a little deceptive, probably not intentionally, but that is not nearing zero there. That's nearing 800,000. So there's 800,000 more ounces left after that. But I do know that a lot of that 800,000 is not for sale. That is just the holdings of the vault. Very important, because whoever's holding that silver might not be for sale. Might be for industry to be used later. Here we have a article from Zero Hedge that writes, cracks continue to multiply. Let's open this up. Let's duplicate this. I guess we only get this is a premium. We only get it's okay. Cracks continue to multiply. The Bank of America warns Fed must slow down now or risk breaking the corporate bond market. And I did learn something interesting, because this show is educational and you are learning along with me, not an expert, but I'm trying to become one. Welcome, join me in becoming an expert on finance. The subject that you're not supposed to understand. It's only for smart people. You're not allowed. They use big words. So I asked myself, what in the heck is a corporate bond? That's not like a stock? Why would you want a corporate bond and not a share? So we get to go to old trusty Investopedia here and find our answer. Corporate bond, definition and how they're bought and sold. What is a corporate bond? A corporate bond is a type of debt security that is issued by a firm, sold to investors. The company gets the capital it needs in return for the investor It's a pre-established number of interest payments at either fixed or variable interest rate. That sounds an awful lot like the share of the company. They issue shares to raise capital, right? So what's the difference? When the bond expires or reaches maturity, the payments cease and the original investment is returned. So you no longer hold the bond once it's, what does that call when it matures? There's a word for that. Well, when it matures, the agreement is fulfilled and that unit goes away. Key takeaways: a corporate bond is a debt issued by a company in order for it to raise capital. An investor who buys a corporate bond is effectively lending money to the company in return for a series of interest payments, but these bonds may also actively trade in the secondary market. The highest quality and safest lower yielding bonds are commonly referred to as AAA bonds. Now, I've heard that word before. Okay, AAA bonds. While the least creditworthy are junk. Let me get to the good part. Why corporations sell bonds. Corporate bonds are a form of debt financing. They are a major source of capital for many businesses, along with equity, bank loans, and lines of credit. So they do issue shares, equity, to get some money, and they can also borrow from a bank. But they issue bonds too. I wonder in what situation would you choose what? I bet that's a whole thing in itself. Debt financing is sometimes preferable to issuing stock because it's typically cheaper for the borrowing firm and does not entail giving up any ownership. Oh, okay. So you just need profits. Here's the good part. The difference between a corporate bond and a stock: an investor who buys a corporate bond is lending money to the company. An investor who buys stock is taking ownership of the company. If the value of the stock rises, the investor's stake rises or falls with it. The investor may make money by selling the stock when it reaches a higher price or collecting dividends paid by the company, or both. In investing in bonds, an investor is paid interest rather than profits. The original investment can only be at risk if the company collapses. One important difference is even if the company goes bankrupt, it must pay its bondholders and other creditors first. Well, there you go. It's a different risk profile. Interesting stuff. And I did find this really cool. This is cool. I don't know if it's like good in the sense, does it work? Is it accurate? Can it be relied upon? I don't know, but it sure is cool. Here I found, here's a chart that's issued by New York Fed? Yeah, New York Fed. Corporate Bond Market Distress Index. So they're indexing the distress in the corporate bond market. Looks interesting. It looks like it's going up, but not severely compared to where it's been. We do have 2008 over here. And that craziness of COVID there. And we're climbing. And one thing that I'll point out about this is the data does stop on September 23rd. So I'm going to come back and have a look at this. I'm bookmarking this. I want to see where this goes. Maybe Monday we get an update. And what happens if we see it shooting up a little more? What if it does approach the 2000 level? There's questions. We just saw the article. Is there stress in this market? I would assume so. I would assume there's stress everywhere because of the interest rates, correct? Next up, Biden says he'll release 10 million more barrels of oil from the dwindling supply. From the dwindling oil piggy bank after OPEC's production cuts. But this is the big risk of more withdrawals. Well, I'll tell you the big risk of more withdrawals. Like, you're using your savings account, right? And I did make the analogy over here. It's like American households. Now we're just paycheck to paycheck with oil. What could possibly go wrong? Seems really serious. The energy is the one thing that I read all this doom and gloom, and there's war. banking collapse, liquidity crisis, civil conflict. But the one thing I'm like, damn, that worries me is the energy. It is the energy. So I don't know. I'm not going to read this. The problem with this has got to be apparent, right? That is problematic on its face. Who needs to say more than that? Oh, and I did find out that if you retweet RT or Sputnik, you do get a warning label on your tweet. But I find great news on Sputnik and RT. They're doing a little bit of actual journalism there. And I mean that in the sense, I'm not saying that in the sense like you must believe it. I'm saying in the sense that so many of these articles, and this is one of the problems, maybe super long term, I want to be involved in helping correct this, but so much information is just recycled. It almost feels like there's possibly less journalism than ever, even though there's more news than ever. Let's have a look at this article. This is really important. This goes into the theme of our show here. Here we have an article from Sputnik that says Brazilian president says cooperation with Russia on fertilizers is vital for Brazil. So here we see again, the BRICS are moving to secure resources for themselves. Cooperation with Russia on fertilizer is vital for Brazil, the Latin American country's president, Bolsonaro, told Sputnik. Russia is vital for us on the issue of fertilizers. And I saw something really interesting. If you did hear about the incident on the Crimean bridge and the attack and the destruction of that bridge, I'm told this can greatly impact fertilizer. Let's see, you got any more? That's self-explanatory. On to the next thing here. Here we had a really good post from Reddit. Oh, then this was I think this was repost. So I'm leaving Twitter and going to Reddit for a Twitter post. Oh well. The Fed finally did it. They broke the market. The Fed finally did it. The Dow Jones, the 30 largest industrial stocks on the planet right now, is officially more volatile than Bitcoin. Wow, guys. Everything's fine. Next up. Oh, I really love this. This is a post on Reddit in the Silverbugs community. This is just so awesome. This makes me happy. I'm not necessarily even a Pokemon guy. I know what it is, and I can't tell you much about it. But this is exquisite. This is fun. It's beautiful. It's well made. That must definitely have taken years of practice to do something that detailed, right? I don't think that silver pouring is super easy. Well done. Oh, and I didn't even upvote. What a guy. What a guy. Here we have a tweet from one of my favorite dudes ever. This is Rafi Faber. And Rafi writes, I shared these charts at the Endgame Investor just now. It shows total silver and centralized paper funds across the world. It's very obvious that the silver squeeze is working. All these funds are being drained. Yeah. And the nature of this is that they're supposed to grow in perpetuity. They're supposed to acquire more. Maybe that's not a correct statement, but you would expect them to grow as the ETF itself grows. But they're being drained out. Very interesting. I'm sure this is heavily weighted towards SLV, but there's plenty of other ETFs. So the ETFs are losing silver. And as far as I know, okay, and here's the interesting part about the ETFs losing silver. Someone can correct me if I'm wrong. I don't think I'm wrong. Ultimately, ETFs aren't really supposed to be like an open market source of silver, although you can take delivery. There's supposed to be better ways to acquire silver. It's not supposed to be the main way. So to see it still being drained from the ETFs, it says something. And we can review Friday's final number. CME's stack could now top 22 million ounces of silver and 1.45 tons of gold. Yes, CME owns the COMEX exchange. What's that about? Plus a big gold vault move out of registered 5.9 tons. Registered silver ticks down. So CME that owns COMEX is not, they're taking silver off COMEX for themselves and building a silver and gold position. Well, let's ask the obvious question real quick. What is the CME? CME Group. CME Group. Who are you? CME Group is an American global markets company. It's the world's largest financial derivatives exchange. Oh man, how did I not know that? It trades in asset classes that include agricultural, currencies, energy, interest rates, metals, stock indexes, cryptocurrency futures. The company offers futures contracts and options on futures using the CME global trading platforms. I don't know what to make of that, but it's certainly something. It's certainly something. I need to learn more about this CME. This is the real shit right here. This is the real shit. Back to the post from Ditch the Deep State. 2 truckloads arrived at the vault. 2 bigger truckloads left, with the net reduction of 110,000 out of register. Oh no, out of registered came 34,000 ounces. And we did not crack the 40. Yesterday, we did not crack the 40 million ounces of silver that we were hoping to crack. So that will have to be hopefully Monday of next week. And let's see what kind of crazy news we get between tonight and tomorrow. It's been every day something huge happening. Next up. Here's a great meme. Here's a great meme from, I believe this is Wall Street Silver. Yes, Wall Street Silver. Reminder that almost in any emergency situation, but especially natural disasters, one redneck friend is worth a neighbor. Excuse me. One redneck friend or neighbor is worth 1,000 PhDs. It's great. I got a couple redneck friends and good people. I found a new cool website. Statista. I'm going to be using this a lot. There's a lot of great information. This is my new, I'm going to come to this thing for so many things. Even just to get ideas. This website's awesome. And we're just pointing, I'm speaking a lot tonight, and we're just pointing out here. Job openings fall sharply as labor market begins to cool. And this is what we're aiming for. One way to slow inflation is to make sure that no one has any money, right? Job openings headed down and unemployed. Yeah, so they want to see those job openings coming down, and we're not there yet, but the unemployed persons is going to have to come up. So I think that means don't expect interest rates to rise unless people that are saying that there's no other way and we're going to destroy the global economy. I saw the tweet from the UN saying that we are headed towards a global recession, and the US is to thank for that with the higher interest rates. But apparently they got to do what they got to do. Apparently they're more worried about inflation. But I think that it's also they're just buying as much time as they can. So if they can afford more time with another pivot and not use that card right away, then yeah, that's what's happening, right? That's what I would think. Here we had a tweet from RT. Censored. Putin and Zelensky to attend G20 in Indonesia at the same time. When is this thing? It's in Bali next month. A diplomat told the UAE. I feel like I want to make a joke about this, but I don't know if this is... It would be interesting to see the social dynamics there with Putin and Zelensky in the same room, in the same building. Will they have their entourage with them? Sambo match. Jesus Christ. We did have a tweet from Michael. Comex and LBA. This is interesting because he's doing the Comex and the LBMA together, and that's what caught my eye about this chart. And we do see a sharp reduction, but together there's 1,184 millions of troy ounces. Okay. Same story, but now you're just seeing it together. And that is interesting. We did see, well, this is new information to me. So at the beginning of the silver squeeze, I do believe that we saw the COMEX start to go down, but that doesn't mean the LBMA was going down, and it looks like they're going down together now. That's significant. This is a very important tweet. This is the tweet of the day. I need a tweet of the day. Boom. Boom, baby. Who says that? Boom, baby. Total revolving credit through the roof. Highest it's been. Too bad there's not 2008 in that chart. Personal savings rate. Very, very simple. People have super high debt and the savings are drained. Simple as that. Zero hedge rights. It's almost over. Is it now? Or is it just beginning? Let's go look at a comment under this. Let's see what comments underneath this. Experienced to separate instances recently where people were asking for money to buy gas to get home and another to buy food and groceries. Would exchange their ring, maybe coincidental. Oh, I experienced 2 separate instances of people asking for money. The next user says, no, that's a ring scam. Oh my God. Next up, we have a tweet here from Oscar G. Salem. Who's going to bail out German pension funds when it goes apeshit? Yes. So one way to think about this, and again, anyone please correct me. One way to think about this is, I don't know how detached England is from the rest of the European economy because they did have Brexit and all. So I would assume there's a certain level of attachment. And Britain being a smaller economy than the European Union, and Germany being the heart of the European Union in a lot of ways, we do see this sharp rise. We do see this sharp rise here in the rates, and even a gap there. And then what happens if If this does, I don't think it's if, it's when the pain spreads to the EU. That'll be the big one. That'll be the big one, right? I prayed to the lotus feet of who global bond yields are again threatening to go up after a week of respite. This is ideally negative for risk assets, especially equities. Up moves in yields are not yet confirmed. Only early signs are there. But we have to watch the price action. This is Greece, this is Spain, this is US, this is UK, this is India. And let's open this up a little bit. So nothing alarming at the moment, but they are all turning up. They're all turning up there. All together too. And obviously the markets are in, I mean, these shapes are remarkably similar. This is a global economy, ain't it? And I do believe these are all 10 years. So you were comparing apples to apples. Where do the rates go from here? And do they all go to there? Do they all go together? Sure looks like it, don't it? The only one that even looks a little bit different is the US. And I mean, it's easy to imagine why. I got one more tweet for you. And this is the article. I found another really interesting thing from Statista. And I will continue to harvest cool charts from this site at all times. Maybe economics related, maybe health related, maybe somewhere in between. But this was so important to me that I had to show it on my show. This is so good. Consumption of vegetable oils worldwide from 2013 to 2022. Up, and up. And I did make a short about this. What people need to know, in my opinion, is that, well, there's a lot of speculation. I think it's more than speculation. There's a lot of firm believers, include me, that seed oils are really bad for you. And all these big blocks, they're definitely seed oil. Palm oil is seed oil. Soybean oil is seed oil. Rapeseed oil is seed oil. And certainly, if you hear something called vegetable oil, that is just a mix of many seeds. 2 or more seeds in vegetable oil. And rarely is it a good one like olive oil or coconut oil. Forget rarely, never. If it says if it's olive oil or coconut oil, they'll tell you. If they're calling it vegetable oil, forget it. It's definitely seed oil. Very interesting. But at the same time, part of the relevance of this is that the world also depends upon seed oil. It is a major food product. And a lot of this seed oil is in jeopardy between Ukraine and Russia. They supply, amongst many things, they supply the world with seed oil. And it's very important to some areas for the calories and also just for the way that they eat, that the seed oil is affordable and present. All right. So had a 40-minute show for you tonight. What do you think of the new format? I'm going to continue to make this show as interesting as I can. And we'll keep experimenting with the Twitter layout. How'd you like that? You have any idea? You have any input? I do thank you for liking and subscribing wherever you do. I very much appreciate that. And if you have any feedback for this show, please let me know. I'm going to continue to harvest the most interesting information and work my way towards finding us some great guests. I'll be here every night to do a video and cover everything that's going on. And we're going live very soon here. Very, very soon we're going live. I do appreciate you for watching. And I hope that you're in good health. And I'll see you very soon. That would be tomorrow. You have a good night.